welcome to Ecoholics. Today we are going to understand the difference between factor income and transfer income. This is a very important concept related to macroeconomics, and in many competitive examinations and interviews, this question is often asked. So today let's understand in very simple language and in very simple economics the difference between factor income and transfer income. Let's first start with the concept of factor income. Over here, we talk about factor, which in turn leads us to understand about the factors of production. So this is something related to the factors of production. Now we know that there are 4 factors of production and which we talk in economics, and through that, whatever income is earned is called as factor income. Now let's derive the meaning of factor income. The income that is received by factors of production, namely the land, capital, enterprise, or any such factor that contributes to the factor income, will be considered as the factor of production, and factor of production for rendering the factor services. So for example, if we talk about land, so land is giving us the rent, and rent is known as the factor income because land will be providing us space for building, for construction, for farming, agriculture, poultry, services, roads, investments, plenty of things. So piece of land, one piece of land can contribute to a variety of things, and which is why it is a very integral factor of production, and this factor of production will be receiving rent as the factor payment or factor income. Similarly, if we talk about capital, so capital is also a whole lump sum amount of money that is invested in purchasing a particular enterprise or constructing a business. So it is also a very important factor of production which leads to capital formation, right? And which is why that gives us another factor income, which is called as interest, right? So similarly, there are different factors of income which provide us with factor payments or factor incomes. A very interesting thing about the factor income and how it is different from the transfer income is that this is received for production of a certain good or service. So whenever you talk about factor income, it is always received for any productive activity. And in economics, when we talk about productive activity, we actually are talking about the production of goods and services within a stipulated time period in an economy, and which is why this is related to productivity. Okay, it is earned because of some commodity or service has been produced, and there's some formation of capital, there is some formation of productivity in the economy, and that's how we receive the factor income. Now, if we talk about some examples of factor income, then when we talk about examples, we have rent, wages, interest, and profit. Now let's indicate the 4 factors of production through which we are receiving these factor payments or factor incomes. So rent is received from land, wages are received from labor, interest is received from capital, and profit is received from construction or formation of an enterprise or business. Okay, so enterprise. So with these four important factors of production in economics, we say that they contribute in all the different productive activities. Land can contribute in many multiple ways because land is a natural resource that is received by different countries and different economies, and according to their own geographical area, they have certain piece of land which can be utilized productively for capital formation, for residence, for employment opportunities, for construction, for investments, for variety of things. Then secondly, labor. Labor is the labor service that is provided by human resources, okay, towards the completion of or construction or production of goods and services. Okay, so whether it's a mental labor or physical labor, that will be accruing again to a very important factor of production of productive goods and services, okay, and productive activities, which accrues wages. Then capital, a lump sum money that is required for fulfilling or initiation process of anything possible, okay, as an economic activity, which will give interest and enterprise. For any business or for any economic activity, everything originates from an enterprise. When an enterprise begins, it will provide employment opportunities to not just human resources but also to different other resources. They will get employed efficiently and the economy will run smoothly, and which is why these four factor incomes are included in the national income. They are included in the national income. So this is another very important difference that you can understand from between the factor income and transfer income, that factor incomes are included in the national income, in the calculation of national income. The reason is simple, that factor incomes are received or they are earned within the economy because of the productive activities that happen in the economy. Right? So with this, we end the discussion about the factor income. Now let's discuss about the transfer income. Now, as the name suggests, transfer income, this is the sum of money or an amount of money or income that comes from wealth. Okay, so it's a piece of wealth which is transferred from A party to B party or point A to point B. Okay, this is not a creation of income but only distribution and transfer of that income, which is why this is not formed or not produced from any productive activity. So here, there's no productive activity that creates the transfer income. Transfer income is actually the part of wealth that a person or an entity would have, and it would simply transfer it to another party or another entity. Let's get to the meaning of transfer income. The income received without rendering any productive services in return. So, when a certain transfer income is received or paid by some entity, or its transfer income is received, and if someone pays it, then it will be called as transfer payment. Okay, but the meaning is same. So here we must remember that there is no productive service, there's no goods and services that are being produced in the economy because of the transfer income or due to transfer income. This is mere transaction, one party to another party. Okay, to simplify this concept, let's understand it with a very nice example. Now here, imagine that when the government when taxes individuals and businesses, okay, and when the government provides subsidies to individuals and businesses for different other purposes. Okay, so what is it? It is transfer income. Whether it is taxes or whether they are subsidies, they are just transfer incomes, okay, for the government. They are not rendering any productive activities. Taxes are a portion of a person's or a business's income, which has to be compulsorily paid to the government. But it does not promise that if I will pay a tax to the government is going to render some services to me exclusively. No, because the government has the job of rendering services of welfare to people, irrespective of whether they pay taxes or not, right? So this is a very important part where many students get confused. So taxes and subsidies both are transfer incomes for the government, okay? For the government. Subsidies are technically payments, so they are transfer payments towards different people. Okay, now taking some examples of that, we have old age pension schemes, okay, or old age pension which is distributed by government to individuals, okay, for their old age sustenance. Or we talk about scholarship, which is given to students who are meritorious and they do not have enough monetary resources to fulfill their education. So the government is going to provide them that scholarship so that they can continue with the education that they have. Then unemployment allowance. Now unemployment allowance again is a transfer income. So all of these come under transfer income. So if we talk about transfer income or transfer payment, both are same. You can talk about transfer income. Similarly, transfer payment, both of the concepts are same. It's just that someone who is who has an inflow of transfer amount, then that's transfer income for that entity or individual or business. And if someone is paying it, so it will be transfer payment, but the concept will remain the same. Now here, there's also a very interesting fact whether the transfer income is also divided into two parts. So transfer income, the transfer income can be called as current transfer and capital transfer. Okay, current transfer and capital transfer. Now current transfer income will be that income or that payment given by government or any other authority to the individuals for consumption purpose. Okay, so the current transfer income is basically for consumption purpose, for regular usage, for consumption purpose. For example, if you talk about unemployment allowance, now unemployment allowance is something that will provide earnings for individuals for their daily routine purposes, for their basic necessities, for food, shelter, clothing and many other basic necessities. This unemployment allowance is going to help the individuals. So unemployment allowance can come under the current transfers. Similarly, if there is any other allowance or any other support that is provided, okay, to the individuals or businesses for their consumption, for their routine or regular consumption, then that will be considered to be as current transfer. However, if we talk about capital transfer, so capital is always like a lump sum amount, and capital transfer is for it's like a one-time payment by the government or by authorities to the individuals, to the people or to the businesses, so that they can perform some capital formation activities. Okay, capital formation can happen only when there is investment. So which is why this is a huge amount which can be used for development. So if we talk about the developmental grants, okay, if you talk about grants which are given by different international bodies or domestic bodies or authorities to develop a structure. It can be technological development, it can be social development, it can be welfare related development. So any type of developmental or constructive or any capital formation activity that has to happen through this transfer payment or transfer income will come under the capital transfers, right? So this is the prime difference between factor income and so this is the prime difference between factor income and transfer income. One thing to note over here is that factor incomes are a part of national income calculation. However, the transfer income are not a part of calculation of national income. The reason is simple. Transfer incomes are just from one pocket to another pocket expenditures or transfer of amount. However, factor income is earned or produced. For each individual it is different, and which is why it's a productive activity. So factor incomes are included in the national income. However, the transfer incomes are not included in the national income. So this is about this video, and we will be bringing up more such informative concepts of different modules to you. Till then, stay tuned to Ecoholics.